Good morning, everybody. Happy Wednesday. Hope everyone is doing well. Yeah, let's get started actually right on time. If you are a Traders Trifecta member, remember we are doing our Kickstarter class in an hour from now. And hopefully you've received an email for that. So if not, please make sure you reach out to the team. And with that, let's get started. Again, good morning, everybody. Happy Wednesday. It's Fed Day today. It is the May 7th. Serge Berger here from thesteadytrader.com. And what we're going to do, we're going to go through our top few things here on the notepad this morning, as we do every Monday through Thursday, 9 o'clock Eastern time. So that's more or less right about right now. Please make sure you subscribe to the channel. Very important so that you can get updated in real time as to when we go live. And also, please give us a thumbs up like. That's very important so we can continue to do this morning call. All right, let's get started. So today is May 7th. We're going to look at three things. Update on the sector front. Where's the performance this year? In fact, you're getting a bit of a glance here right now. We'll go into this a bit more in just a second. I want to talk about dollar yen. There's an ETF for that if you like to do ETFs on that. I do want to talk a little bit about oil. We'll look at the S&P quickly as we do every morning to get started. And then I do want to update you guys on Palantir versus Roblox. There's an interesting dynamic there. I had a call yesterday afternoon. Very, very scary news. Once again, just kind of shows you where the head of the retail trader is at. They've learned no lessons from any drawdowns, and they in fact are doubling down on things. And it's probably going to end up 10 times worse than I could possibly think. But there you are. We're trying to make sure everyone is educated. So let's start off first before we get to this chart here and talk a little bit about the S&P 500. Quickly, I'm going to quickly bring up a new chart on that because I don't want to get rid of the other one. So give me just 1 second, and here we are. Obviously, you know, we are in this sort of holding pattern that we've been talking about now really since last week, Thursday. And that is unchanged. We remain in that holding pattern. Nothing's really changed. We still have those overhead resistance areas, so what we call the sort of trapped buyers up there in this area. That hasn't changed. It's the same exact thing as far as the NASDAQ 100 is concerned. In fact, I can quickly show you this chart that I sent to some clients this morning. Looks like this. This is the NASDAQ 100, same exact idea. And, you know, we do think that there's just a lot more struggle up here. It doesn't mean that the equity market has to fall apart right away. But what is going to happen at some point, almost definitionally, is that we are going to start to see a price shock because of the tariffs. It may not last forever, but you're going to start to see that news or those tariffs start to work themselves through the economy, and we'll have to see what layoffs look like over the course of time. But the earliest data we're going to get from an economic weakness perspective is probably going to be now. The jobless data, by the way, I went through it a bit more in detail with an expert yesterday. You know, not to spend too much time on this right now, but it's basically hocus pocus what they did in those job numbers as far as the new creation of companies was concerned. So I think that jobs report that came out last Thursday was probably half as good in reality. So it'll be revised, and in a month from now, we'll get the revised number, and we'll probably see that it was just nothing but a joke. So that's sort of my time frame, you know, the next few weeks, as we should see things start to kind of, you know, leg lower. Quickly, on another point that I mentioned before, again, the retail investor has learned nothing. They've doubled down on many stocks. A lot of people are uncertain, but a lot of people have doubled down. That's classically what you see at this kind of juncture after a 15-year gambling bubble. And again, we're trying our very best to make sure people don't do that. I realize it still falls on a lot of deaf ears, even right now with this audience, I'm sure, because, it's reflective of the gambling bubble we live in. But, I'm doing desperately everything I can to make sure that we teach people that the market is not a gambling sort of casino, but rather it's there for to us actually make money. And the more we can extract that gambling gene from people, the better it'll be. Everyone will be off from over time, right? And I think this is important to kind of notice. So no, we're not buying risk assets up here as far as equities are concerned. Again, I think the reward to risk is very bad. That does not mean that we can't see the S&P go a little bit higher. Remember that range we talked about over the past week or so? We talked about that range being as high as maybe 5,800 on the SPY. SPX, excuse me, and roughly down to 4,800. So that's 1,000 points. Even I can do that math. So from here, if we squeeze to 5,800, that's another, call that, 3.5–4% from here if we were to get there. So it's not like we're trying to pinpoint the exact top. I think I don't think that's possible, quite frankly. I'm sure someone on Twitter or YouTube will tell you that is possible, but they're full of shit and they should be unfollowed immediately if you hear that kind of crap. So that's that. Now, let's talk about performance quickly year to date. So this is what gets us into the next chart. So here is factually what's going on year to date. And again, the gambling bubble we live in hasn't really resonated with most retail investors yet. But here's factually what's going on. If you look at the bottom two lines, that's the S&P and the NASDAQ 100. Again, basically max 7, right? Obviously, from a correlation perspective, I mean. And then you look at the top two lines, the German DAX up 17%. They had a bit of a hiccup yesterday. Couldn't vote on the chancellor, but ended up getting it done the same day, which is quite impressive. And the Japanese yen, believe it or not, is up 10.5% versus the dollar through the lens of the ETF year to date. Okay, so what I'm trying to show you here is that the quicker we can get people out of the max 7 chart chasing Palantir, YOLO BS that's happening, and think about actually going towards things where there's a higher probability of making money outside of the complete just very, very short-term trading, right? Which is another discussion. More sort of big picture, just understand what's going on factually. So the DAX versus the S&P, that spread is north of 20% of outperformance of the DAX versus the S&P versus the NASDAQ, even better than that. So just kind of keep that in mind. Now, that doesn't mean it has to continue linearly in this way, but that's what's happening so far. And we think the net selling of U.S. assets, what we're seeing, again, we talked about this for a year now, but it's accelerating now, is nowhere near over. In fact, it may just be starting. It's at the margin, right? It's not that everyone's selling their treasuries and their Apple stocks, but they're rebalancing. And that is a constant, sort of offer into the market. Every rally gets sold into marginally, as opposed to, foreign pension funds and others, or large foreign companies that made a lot of sales in the U.S. keeping Apple stock in their treasury, as a replacement of cash, right? So that's all slowing down dramatically, and that is going to keep a lid, in our view, on U.S. equities, and ultimately probably on the longer end of the yield curve as well, meaning longer end bonds probably will come more under pressure than being bought, unless, of course, we have a temporary dislocation in the market where the VIX spikes to 50, 60, in which case we could see a bit even in the 10-year yield bond, meaning note, I should say, where yields would go down, price would go up. But again, we would think that'll be more temporary. So just keep this in mind. Now, let's talk about the dollar in. In fact, if you're an ETF Silo Pro member, you are getting a trade alert on this sent out in about half an hour from now. So let's talk about dollar yen. Now, again, I'm not a currency trader. What we do is we make currency calls through the lens of macro bets. And if I take everything that I just mentioned and kind of put it together, then I think there's a huge difference in I guess, fiscal policy or monetary policy for the most part between what we're seeing, in the U.S. with the Fed. We'll get that later on today and hear a bit more, versus what's happening in Japan, where they're actually more leaning towards hiking rates, which is completely the opposite. And so what that leads us to, and again, the Japanese are huge holders of the of treasuries, so we are likely going to see a further appreciation of the yen versus the dollar. As far as this chart's concerned, which is dollar yen, that would be meaning the chart goes down, right? So that would be basically meaning this, right? So this chart going down means the dollar is losing, is depreciating versus the yen, right? Meaning the yen is gaining strength. You can look at it in either way. So we think that could be, you could see, somewhere like the mid 130s, probably closer to 130. I think that's entirely reasonable. Remember, these are currencies, so 7 or 8% move in currency terms is huge, unless you're talking about very, very, very emerging markets, and this is not. These are developed markets, US and Japan, of course, being developed markets along with Europe. So that is likely also going to put pressure on equities as far as we're concerned. It might, in fact, be a result of it's unsure what's causing it. Is it dollar yen weakness that causes the U.S. equity weakness, or is it equity weakness that causes people to sell more dollars? It's obviously interlinked. It's hard for me to say which one's sort of the dog and which one's the tail, and I'm sure that's a longer discussion. I'm sure some people have some great opinions on that. I'm just more aware of the positive correlation. I think that's kind of more my point. So if you're looking for an ETF, and again, not recommendations here, this is purely educational, the ETF for that, or one of the ETFs for that, is FXY. Okay. Now, this is not a levered ETF. This is just a currency ETF. So in terms of percentage moves, 4, 5, 6, 7% is possible. I know that puts a lot of people asleep. People that are used to buying YOLO out of money calls on Palantir. But those people will blow up in the end anyway. So it's more about understanding that this is the trade. Now, this can be expressed with options and all sorts of stuff, right? So I'll leave that to you guys. Again, I'm not recommending stuff here. This is educational. But if you're looking for a chart pattern and you like to draw lines on charts, this is kind of what this looks like. The lines kind of draw themselves. It's really not that difficult to imagine the FXY going higher. So this is the inverse of the chart that I showed you before, right? So if the yen appreciates versus the dollar, then this chart goes up. That's the same thing as the chart before going down. So I hope that's not too confusing for everyone, but this is what that would look like. So again, we can annotate this in 1,000 other ways, but to me, this is pretty bullish. If you look at this through the lens of a weekly chart, it becomes even more condensed. You can kind of see, we're kind of bottoming here. So again, FXY going higher would be dollar yen going lower, meaning the yen strengthening against the dollar, i.e. the dollar weakening against the yen. That's kind of the way we would look at it. So that's FXY, in case anyone, hopefully you guys care about this. Otherwise, let me know what else you would like us to look at. Now let's talk about oil quickly. So what's going on with oil? I like to look at oil through the lens of the futures contracts. One thing you can do is pull up the QM futures contract. This is the E-mini contract, and this is kind of what oil looks like longer term. Now, oil breaking below sort of the $65 range to me speaks that the economy in fact, the global economy is probably weakening. Oil might be sniffing something out. I know there's a lot of supply. It's possible that this is also front-running some sort of resolution, Russia, Ukraine, in which case possibly Russian barrels might come, into the Western world again. I don't know, but it's possible that there's a glut of supply, and then there's, of course, it's a potential of the economy slowing down. So I don't think this is a bullish call for the economy. I don't know how low oil could go. I would have thought 60 is kind of where it might settle out. A lot more people I talk to now think lower. I think that's possible, but I'm going to tell you, if we get towards the sort of, 50, into the 50s, like low 50s, I should say, then that would be, to me, would outside of a complete global shutdown of everything, would become a screaming buy. It might already be a screaming buy, but I'm watching it and just kind of putting it on everyone's radar. I'm not there yet to buy it, but I do think we're getting closer to an opportunity to start getting long oil again, and that would also then be probably where when it's going to be time to buy energy stocks once again. So again, not quite there yet, but heading in that direction. The other one I wanted to point out is Palantir. We looked, and this is now more on the trading side, right? So what we talked about yesterday morning, and I made a video on this as well, so hopefully you guys received our email in the morning. You can also watch that video on the YouTube channel. That's why you want to subscribe to the YouTube channel. It's free. Palantir yesterday down 12%. And so, it's possible that Palantir at some point starts breaking higher again. It's very possible, but it's also possible that it's putting in a double top, right? So right now, it's really a low probability call to have a lot of conviction. In it, just to be very open-minded. And what's really interesting is Palantir being a retail favorite stock along with other stocks such as Roblox. And you will notice that this is the same exact chart, right? At least as far as the past, 12 months or so are concerned. So, when I see something like Roblox in the same kind of area, and by the way, I really like Roblox. First of all, I like the games. Our children are playing those, but also like what the company does. So this is not being pro or against any of these stocks or these companies. It's really just understanding where the retail investors, traders mindset is at. And I think what we are seeing here is a decision point where if the broader stock market stops going higher, it's going to be very difficult to imagine that Roblox and Palantir are going to break higher from here, right? Conversely, if the market does hold up somehow and the S&P blows to fresh all-time highs, then these things can find legs again. So again, it's about being open-minded, but the reason I wouldn't chase these now until they actually have breakouts, if they have breakouts, is because, again, this gets us full circle to where we started about 15 minutes ago, where the S&P is at. Okay, so hopefully that makes sense. Tony wants to look at VST. So tomorrow is actually. Why is everyone always talking about this VST stock? I don't know what's going on with the stock. So tomorrow we're doing ticker Thursdays. So please come prepared with your tickers tomorrow. I guess they just reported earnings. So let me see what this thing is. All right, so the stock is trading down a couple percent over pre-market. Let's see here. What are your actual questions on VST? I can look at it, but A, I don't even know what this company does, and B, I just need to know a bit of context what you're looking for. But look, I think what I will tell you, the stock is down a little bit. What I will tell you, the earnings call, by the way, starts in more or less now. So just keep that in mind in case you're trading this. To me, this doesn't look any different than the S&P 500. I'm going to say this, Tony, right? So I would just keep that in mind. This is basically looks like the S&P to me. Same chart that that we looked at that we looked at before in the S&P. So I would imagine that whatever this is has the chance to go higher if the S&P holds up well. If not, if not, then this is done going higher. You have to understand the correlation. What is this thing? Let me just look at what this company. I know people keep asking this. VST. Okay. That's why it's on ever. It's in the retail traders. I see why you guys are asking. So this must be one of those retail trader CNBC stories that are talking about power grids and stuff. Okay. Yeah, I mean, I don't think this is a bad sector to be in, by the way. I just would be very mindful that it's going to be very much dependent on the broader market. What I would say, Tony, on this, and again, not advice, just educational here, what you'll find out, I don't know how long you've been in the markets, but what you'll find out in particularly in situations like right now, stocks are stocks, meaning the stock market as a group since it's as an asset class is highly correlated. Now it's possible this thing has a a reason to go higher. And I actually do think this is a good industry to be in, but I'm not sure it has it if the broader market sees another risk-off moment, right? And I do happen to think that that'll happen. So that's kind of my my thought there. And last one real quick, Win wants to look at VLO. I don't know when Valera has earnings, so that's something that they had their numbers. Look, I think this is the same thing. I mean, obviously Valera is in the energy space. I don't think these energy stocks, as much as it's my most bullish call through a multi-quarter lens, I just don't think these stocks are ready to go higher. We need to see oil find some sort of a bottom, and that's why I wanted to take some time before looking at oil. I just don't think we're there, right? So I'll keep you guys updated on when we think we might be there. We're just not there yet, as far as I'm concerned. So I personally am not very interested in getting long this stuff from a trading perspective. From an investment perspective, we're long some energy stuff, but I probably wouldn't get into this just now. And again, oil is going to be very sensitive to the economic cyclicality, and so that's kind of where I would leave this. So we'll leave it at this. We'll see you guys over in Trade Ops, and if you are a Trifecta member, we'll see you in about 35 minutes at our Kickstarter class at the top of the hour. Thanks, and we'll see you back here tomorrow morning at 9 Eastern. Please make sure you subscribe to the channel. Very important. Spread the word.